Hello everyone. Today I am going to present on the topic related party transaction and its disclosure under various acts. Let us see the overview of the presentation. The acts I am going to cover is Accounting Standards, Companies Act, SEBI Regulation and Income Tax Act. The topics are covered: definitions, transaction involved, approval required and disclosure requirements. What is the related party transaction? Related party transactions are transactions which is occurred in between the parties who have pre-existing relationship. But the definition doesn't seem similar to every act. It have different definition under different acts. Those will be seen under next slides. Then why we need related party transaction? The statutes want the fairness transaction and transparency in between the transaction of the entities. So these things are comes into exist. Let's start with the accounting standard. Let's see accounting standard 18, which describes the definitions, what are the disclosure requires, and one more thing is the what are the transaction involved in as a related party transaction. First see the definition part. Who are the related parties? Related parties means the entity which have significant influence over other entities, or the entity which have control over the other entities. The control means the 50% of the voting power. The significant influence means the subsidiary companies, holding companies, associate companies, all will comes under significant influence. Then let's see what we need to disclose in the financial statement as per accounting standard. First, we need to disclose the parties involved, what is their relationship, what are the transaction happened between them, what is the outstanding balance. All these needs to be disclosed in the financial statement. And in accounting standard also says what are the transaction we should considered at related party transactions. It gives examples like selling and buying of goods, services, or leasing of fixed asset, and any agreement entered between the parties. All this transaction will be considered as related party transaction. Let's see about the Indian Accounting Standard 24. It also describes the definitions and what are the transactions involved and what are the things we need to be disclosed in the financial statement. If we see the definition part, it is all as similar as accounting standard, but some term difference we will find in the Ind AS. The terms like it includes key manager person with their close relative parties. What we need to disclose as per Indian accounting standard. The disclosure also same as accounting standard, but the excess part is the key manager person benefits, post employment benefit we need to disclose in as per Indian accounting standard. Next we have Companies Act 2013. What is Companies Act 2013 defines the related party transactions. It gives wider definition as compared to accounting standard. It says the directors, key managerial persons and their relatives. In this, relatives includes the parents, father, mother, stepfather, stepmother, spouse, siblings, step siblings, daughter, daughter ka husband, son's wife, stepson, and it also includes you in China son. Then a firm in which parties are partner, the private company in which parties are directors, and the public company in which the parties holding 2% share capitals, and any body corporate which acts in accordance with the parties, the holding company, subsidiary company, fellow subsidiary companies. As per Companies Act, some transactions need approvals. Those are listed here. The sale, purchase or supply of any goods or services which needs approval from the board. If it exceeds 10% of turnover or 100 crore, it will need special resolutions. Selling or buying or leasing of property requires board's permission. If it is exceeds 10% of net worth or 100 crores, whichever is lower, then it requires special resolution. In case of availing or rendering any services, this also requires board permission. If it is exceeds the limit as mentioned above, it requires special resolutions. The rating of securities or derivatives which exceeds 1% of net worth is requires special resolutions, and related party if appoints as a place of profit or office, if its remuneration exceeds 2.5 lakhs, then requires special resolution. Let's see the forms which we are filing with the ROC, which requires related party disclosure. First one is AOC2. AOC2 is the director's report, in which we are going to disclose the related party transaction happened during that period. It is mandatory if the related party transaction occurred in the period. Next one is MGT7. MGT7 is annual return. In the annual return, we need to disclose all the related party transactions. And next one is MGT8, which requires CS certificate for the annual return. In that also we require to disclose the related party transactions. Another one is DIR8. DIR8 is director's declaration regarding disqualification. If director is disqualified because of the related party transactions, then these needs to be disclosed in DIR8. Let's go to the SEBI Regulation 2015. What is the definition under SEBI? SEBI says the definition is as defined in Companies Act and also accounting standard, but it includes two more points like deemed related party. Who are they? They are the part of the promoter or promoters group, and one more thing is the entity who hold 20% of the 20% or more interest in the entity. Let's see the transactions and approvals required as per SEBI regulations. All the transaction which needs board's permission, and one more thing they require is audit committee approval. And if the transaction is material in nature, then shareholder permission also required. Let's see the disclosures to stock exchange. What the company needs to disclose to stock exchange. The first one is half-yearly RTP disclosures. This is mandatory for the listed companies. They have to provide related party transaction in this report. It is half-yearly basis. The next one is corporate governance report. This should be submitted to stock exchange quarterly. In this, what are the approval received from the audit committee should be disclosed in this report. This is material RPT approval outcomes, in which if there is any changes in materiality of the RPT approvals, then those things should be disclosed in this report. The next report will be statement of deviation. If there is any deviation in the transaction due to related party transactions, then those should be disclosed in statement of deviation. This should be quarterly reported to the stock exchange. Let's see the Income Tax Act 1961. It doesn't define or provide disclosure requirements as compared to Companies Act or SEBI Act. It says that as per Section 40A(2) of Income Tax Act, some of the transaction which entered between the related parties, but it is not in the arm's length price, then those transactions should be disallowed while filing the ITR. If the entity liable to tax audit, then in the form 3CD of the entity, it should be disclose these transactions. Then Companies Act, the entity liable for tax audit, then the same should be disclosed in the form 3CD report. Then Income Tax Act talks about transfer pricing. In transfer pricing, it says if the transaction between the domestic related specified related parties or international transaction, these transactions should be disclosed in form 3CEB. This is all about related party transaction and disclosure. Thank you.